Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pullback on the Bitcoin chart as we did pump to a new high in this, in the start of this new cycle. We pumped to a new high off of those macro lows. And of course, with all these type of pumps, especially in a high rejection area, we are likely to see pullbacks as people naturally take profit. But the cool thing is that we did make a new high. Guys, let's go ahead and go over to my previous episode because some of you struggle with watching full episodes. And so I just want to make sure that you understood this point. Right here on the daily, you can see that we are having a little bit of a check back in the daily momentum pool as we're facing that resistance that has just rejected us time and time again, right? Rejected, 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 rejected again. Okay, are we going to be accepted? Well, let's see. If we can hold the momentum pool above 31,082, and especially if we can get above it at 31,472, then we are going to have a bias to the upside. And personally, if we dipped below this box and re-entered it, I would be willing to entertain that long because we are above the volatility pivot. And in fact, even if we checked back to the volatility pivot at 30,523, I would still consider that worthy of a potential entry, just because our bias would still be to the upside as long as we're above the Bollinger Bands there, above 30,200. And in fact, the neutral point of control on the RSI is 29,824. So I still would consider that as a possible, entry here, as a possible level for us to buy back into this market should you have taken your profit already up here. And any pullback, I think, is a blessing, especially if we get to that weekly and that bi-weekly entry here. Now, what I don't want to do is lose that area. I'm going to be a little bit sketch if we come down to the weekly Bollinger Bands midline. I still would be willing to buy this area in a flash wick. I don't want to buy it if candles start kind of, just consolidating there, okay? I don't want it to be consolidating against support, which could break down. I would like to see it just, maybe have a pullback, maybe check here and go, or have a pullback somewhere here and go, or just have like a flash wick down there just to scare the living bejesus out of everybody. And then on our way back, when we reclaim these levels, that would be the entry, and that does line up with this diagonal that we have here, okay, which is being formed by some of these wicks. So this may be a blessing in disguise, which ends up becoming an accumulation wedge that we take off from if we don't just break out here, okay? All right, guys, so I think you understand what I was saying in the last episode, which is that we needed to hold, see, there was our hold momentum level at 31,472. If we didn't hold 31,472, then you automatically knew that we were breaking down. Now, we were just a hair below that number, but what I was basically telling you guys is that we were in this zone where we have like a trend where we reject from. It's just a place where people take profits, and it's getting higher and higher and higher each time. But each time we tag it, we get rejected, 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 right? And so, guys, that meant that it was natural to have this conversation that we had a possibility that we were going to lose our hold momentum as these guys took their profit off of that nice XRP pump. And then if we lost the bullish control zone at 31,000, which also corresponded with the lose momentum level, then that would be accelerated to the downside, where our first test would be that volatility pivot. We got underneath the volatility pivot, and then we would have to see, do we hold that neutral point of control on the daily at 29,800-ish or above? And in fact, we have. So we have held that neutral territory, which means that bulls still have a slight advantage in this market. It's just they're not in full control. The bears are getting their due, but the bears have not taken control of the chart yet. And should they take control of the chart underneath 29,000, 800-ish, according to this one 2 days ago, right? This was 2 days ago. Then, what I really wouldn't want to see us do is lose 29,000, that 1 week and 2 week volatility pivot. And I wouldn't want us to lose this diagonal here, which is actually the weekly Bollinger Bands midline, because that would suggest that we could re-enter a bear market. And so, guys, definitely we want to stay above 27.5, 28,000, preferably above 29,000. And hey, we're actually still bullish if we're above 29,800. Okay, so everything's good so far. Okay, look, our current price is 30,372, and what I'd say, pullbacks could be possible blessings. It's just you know the key levels where things start to break. Okay, that 27.5 to $28,000 area is going to be really a big deal, okay? And again, like we just want to flash wick below to there. If we get below 29, we really want to hold above that 29 securely. You know, we want to be kind of nice alpha up there. Guys, let's go ahead and take a look at the charts. So if we just jump straight to the charts, you can see that I did draw this line, okay, this line over here, which does correspond to the Bollinger Band's midline here on the weekly, and also I have this green line going horizontal, so there's a diagonal and there's a horizontal. And the diagonal, I just want you to keep in mind because I'm just going to leave that on all the time frames, okay, just so that we always are aware where that line is. And then the green line is actually the weekly and the 2-week volatility pivot. So where they intersect, that's pretty much the level that we don't want to violate, which I just showed you in the video over there. And so look, we're well above that. Yes, we could fall down. Yes, there's a little bit of a trend suggestion that we could dip down into that area and scare again the living bejesus out of people as we collect some of this liquidity right here. Okay, there's nice liquidity to be grabbed there, but should we, hold above that area or just flash wick below and then, come back up? Again, it's just a blessing for our entries on the next move because we can buy in on the reclaim and it might just be pretty bullish. Okay, so again, like this system doesn't break down. Okay, this bull market doesn't end unless we break this area. And so again, that's why I'm telling you, Alpha Fam, underneath 28 to 27.5, it'll get pretty scary. Things are going to break, okay, to the downside. But above 28 to 29, especially at 29, we're very secure, in my opinion. Okay, so I hope you understand that. And likewise, I just think I'm going to remind everyone at the beginning of these episodes, as long as we're here, that we are in, of course, a bull market, guys, and we are going to continue to be in a bull market as long as we are above that Bollinger Band's midline on the weekly. Bull market, bull market, bull market, bull market, bull market. We are in a bull market, okay? And just get that through your heads. Yes, there is the possibility for fake outs, but you usually see it correct within 1 to 2 weekly candles, and we are talking about months of bull market. So what are you guys talking about? This bull market has lasted longer than this bull market, okay? So again, like this one was cut short, maybe because of the virus era. And we don't have a virus era going on. Now, could the stock market collapse and could that break us under this area? And could we get back into that bear market territory and maybe have a check back to our lows or something, right? Just like we did here, okay? Well, yeah, I mean, that's possible. We did it over here. We checked back to our lows, right? We did it over here. We checked back to our lows. Okay, it's very possible that that's going to happen, but we don't actually know when this one is going to end, and so you guys have to be, willing to go with the trend. The trend is your friend until the end, okay? And so this one ended quite quickly, but this one we don't know where it's going to end. It could be here, it could be 40, it could be 50, okay? Nobody knows. And so again, like, do you want to fight the chart the entire way up? Or do you want to take a chance? In that case, pullbacks are meant for buying, and then you have stop losses because you're buying a bit late, right? You're not buying over here at 19,000 when we first pushed up, And then, by the way, like let me just clear this junk off of here. But by the way, Alpha Fam, like if you wanted some type of validation of this bull market, okay, bull market, then you should have seen this right here where, we were in the bear market there, right? And then suddenly we crossed up here, right? And what did we do? We retested that, right? We retested that bullishly. And so what happened when we retested the Bollinger Band midline there and popped back up above it? It basically confirmed this breakout to the upside. That dip down that scared everyone, like I said, scares the living bejesus out of you, right? That one confirmed that we were still in a bull market. Okay, bull market broke down, little wick below scared the living bejesus out of people. It just confirmed that we were still in the bull market when we reclaimed it. So if we break down again, okay, don't freak out too much. Of course, you can have your stop losses at these lines and these key levels that I give you. You can choose which one you want to choose according to your own risk tolerance. I'm just saying, like underneath those levels, things could get hairy, all right? Don't say I didn't warn you. But above it, right, if we pop back up, then this thing could just take off, okay? So just to be open-minded and don't just get analysis paralysis, guys. You have to be willing to take a chance when you see that we are in a bull market. All right. All right, guys. I think I have underscored that enough. But again, like the bears out there, they're just going to try to bring you down every chance that they get. Look, they had their chance. They had their chance for almost 2 years, guys. For almost 2 years, they had their chance. And look, they double dipped, right? Okay. So all right, so the Bulls double dipped up here, all right, but the Bears double dipped on the bottom, and so now it's the Bulls' chance again, and so we have to give them their chance. And yes, we are hitting some major overhead resistance here, and that's why on the macro it's taking more than just one chance to break through. Okay, maybe it takes 3 chances to break through. Maybe we get sent lower and then we have to try again later. Okay. Maybe even a scary flash wick down, and then we try. But again, like we've seen this before, okay? Like we've seen this before. Here's basically the top of this market. You can see the all-time high back here. Couldn't break through the first time. It tried again, couldn't break through. Third time ended up being a lower high. Started to get sent back down. This one got interrupted by the virus era, and then it flashed to the bottom, and then it had to try again, failed, and then finally it did it. That was like 6 months of kind of ugliness, okay? 6 months to a year of ugliness. But after 6 months, it was up only from there. And so, what I'll tell you guys is if we do get rejected at this area, maybe we could have 6 months of ugliness. It's very possible. Okay, I want to be as real as possible with you guys. I don't want to be one of those guys like Rand Banter and those banter guys that are just like they're just crazy, okay? They just tell you whatever they can tell you to keep you like coming back to their channel. But in this case, I need to tell you, like, if we do break down from there, it could be 6 months of just sideways or down. Okay, we could retest our lows. And in fact, because we had a double top here, we could even flash wick lower. All of that is possible, but we haven't done that yet. And so we are still in a bull market. And guys, if we do get this next dip down, that is going to be one of the bigger blessings of your life, because that's very likely to be, wherever we end up coming down to, okay, that's going to be the thing that kicks off the next up only trend, okay? And nobody is saying that we're gonna go to 150K. Maybe there's a reasonable range somewhere around 70 to 120K. I'll give you that, okay? There is a reasonable range around there based upon the low liquidity that's in the global system right now as we're all fighting inflation. Okay, this was the inflationary period. They were just printing money like crazy, and so everything got to go super spiky. But this is going to be the disinflationary period, and that means that things are going to be kind of on the down low. The pumps might not be what you expect. Maybe we're just going to get our same previous all-time high, kind of check this level. It's kind of a range, kind of thing. And maybe we work our way back up there, maybe get a little spike up higher. There might be a trend that goes up, higher, something like that, or could even we could even have a blow off top or something that could just push us to that 120 level. But I want you guys to be just reasonable and just understand that, a triple top is possible. I guess maybe this would be a double top. from this perspective, with this being our neckline down here. And so personally, I would personally start to take profit pretty heavily around 60 to 65K, just in case there's some type of global shenanigans going on, okay, with the globalist banker money, right? Just in case there's some shenanigans going on there, and they just want to rug pull us. I would take heavy profits at 60K should we get there, whenever in 2024. Who knows, okay? Who knows how long it's going to take? Maybe we get to 50K in the next month, okay? But maybe it takes like a year to get. I have no idea, okay? As long as we're above this one, we are in a bull market though. And guys, after we hit 60 to 65K, then we're going to be talking about that 70K level again, right? We're going to be talking about that 65 to 70K level, and then maybe if we actually get ahead of that, then maybe we can start talking about something like maybe 90K or something, okay, 80 to 90K. And if we get above that, then maybe we can start talking. It just depends how long this process takes, okay? Just depends how long this process takes. We could end up appreciating this asset over time, and it could get to 90K. I think 90K is a pretty reasonable target. Okay, I think 90K is a pretty reasonable target. I would say 85 to 90K. They're going to rug pull us on that 100K again. Everyone's going to tell you it's going to go to 120K, 150K, 200K. They're going to say those type of things. But if you look at this chart, look at the time that it took, okay, to play out this bull market here. All right, and let's just grab like another one like this. Okay, let's bring it down here. And yeah, let's just put it like there, okay? So let's just say that this one had a little bit of excitement at the top, okay? There was a lot of free money in the system, a little bit of excitement. Let's just say that this was a more natural limit right there, okay? Then let's put this trend line like this. Let's put this to the top, and then let's go ahead and drag this one out from its natural location here, maybe to this one right here. And then where do I see? Oh, look at that. That's 72K. Okay, that's in 2025. It's 70K. Okay, if we just have a similar time frame and a similar appreciation angle, then that's 70K. And where would we see the potential bottom of this market? Well, let's just drag out the bottoms. Okay, and then let's line this one up with that top of that market. Let's go ahead and just get really tight there. See how low it can go. Look, we might come down to 15K at some time. Okay, we might do that. Could I even draw this lower? Yeah, we could see 12K, maybe 13K. I don't think we're going to see the real bottom of this virus era, but we could line this up really interesting here, and we could see that yes. There would be a range between like 12K, maybe 11K if you really want to stretch it. Maybe a flash wick lower. Okay, those 10K guys might eventually get their target when this thing comes back down. And so let's just say that we have a mid-cycle rally here that let's see, where would we just kind of look for in this area, right? Maybe something like this. Right, something like this. So if we just wanted to do a projection, and guys, just remember, this is just a projection, okay? I don't 100% know, but let's say that we don't break down here, okay? Let's just take the optimistic view. Let's say that we don't break down here. Then our first place to look is probably between that 36 to 40, maybe 42 area, let's just say 35 to 40, okay? Somewhere in that range is what we're going to be looking at. If we're able to get above that kind of like 42 area, then we might be looking as high as 40 to 50. And then this chart is going to really get tired. Okay, there's going to be just a lot of pressure here. There's going to be a lot of people taking a profit here because these were the candles that dropped us down to the bear market. And so what we're going to find is that probably there's just going to be too much pressure. These guys are going to say you're getting way too overheated, just like right here, right? You saw this. These were the drop candles that brought us to the bear market. And so when we reached back up for them, retested it, they just dropped us back down again. So it's probably going to drop us back down again. Now, could we hold that green line that I have marked out there? Yes, we could hold that green line, and maybe 30K to 25K is our new low, our new buffer area. Okay, we're gonna have to measure it at the time. It's gonna take some time, if this plays out, and so we're gonna have to measure it at that time. But so, it could be like a flash wick down to 25, but we end up holding 30, and then what could happen is that we just continue to go on. We get a little bit of a wobble there, right? And then maybe we push up to that 65 to 70 area. And, we could get a rounded top that then takes us back down, right, in some type of dramatic fashion, just like we're accustomed to. And then you could see, just depending on the angle that you draw this at, right, it could take us anywhere between like 15,000, right, kind of a double bottom here. So that 15,000 all the way down to that 10,000. And, the guys that want 10,000 or so, right, like in that neighborhood, they might actually be right. They might actually be right, but it may just take until the end of this cycle for them to reach that level. That's all. Okay. Sometimes it works out that way. All right. And so who knows? Like this market could come back down to there. And then we also have to give some consideration, right, to this line right here, which is that it might never come back down there, and that just might be gone forever, and that maybe we would actually end up putting in a new bottom around this area, around that 30K. And that's why we're spending so much time here at 30K, because we could be building structure. You see, building structure, building structure, building structure, building structure, building structure, building structure. We might do it one more time, building structure, even dip down, come back up, building structure, right? And then when we come back down here, there could be some scary wick or something. But we will have built the platform for the future that's then the next bear market bottom. See how that might work, and then this asset can continue to appreciate. Now, could we get a flash wick from this, 65 to 70 all the way up to 90? Yeah, definitely we could do that. Could we get another double top type thing? Yeah, sure, why not? Fractals tend to play out. And, could that push us all the way up to even, some type of enthusiasm, like 105 or something? Yeah, I mean, again, guys, like I'm not against the idea of us doing well in this system. I'm just saying that we're potentially creating, right, a new kind of a new kind of layout here, and that there's probably going to be a mid channel and a top of a channel and a bottom of a channel, and that this is going to be excess, right? And that probably we're going to come back into this thing and find out where the bottom is, okay? And so, who knows? Maybe 50K is the mid-cycle bottom on the next one, right? And 30K is the like ultimate bottom, and then comes up to 50K. I don't know, right? I'm just trying to give you some ways to imagine how this cycle could go. And yeah, I think for the macro, that's pretty good, guys. Um, use your imagination for some of this stuff. Don't be a perma bear. Don't be a perma bull. Just be a clever little alpha monkey. And guys, don't forget to take your profits. Okay, you don't have to be loyal to these coins. They're definitely not going to be loyal to you. Just put food on your table, guys. Okay, that's the name of the game. Just put food on your table. Now let's go ahead and jump down to the 1 hour, because I want to show you the setups that I gave in the group Discord. And guys, remember, from now on, I'm not going to be giving the 1 hour in the videos. I'm going to just be posting them in the group Discord. And so if you want those really fine-tuned entries, okay, like the really juicy stuff, you have to join the Discord. It's the group discussion Discord, and the link is in the description of the video below. So here we had the 1 hour that I did post in the Discord, and then you guys can trade this off the 15-minute, because that'll give you also the Bollinger Band strategy. And then if you're really degenerate scalpers, then you can go ahead and put it on the 5-minute. And so here, I'll just put it on the 5-minute just to show you what we had going on here. And let me go ahead and turn on the results of this momentum pool, because seeing is believing, right, guys? And so let's go ahead and just see what happens. Now, remember the momentum pool strategy. You enter the pool, you take the trade in the direction of the momentum shift. So we were pushing up, we shifted down, we entered the pool from the top down, so we're going to take a short, right? If we double bottom off of it or we break below and then re-enter, then we can take a long, right? If we double bottom off of the top or we break above and then re-enter down, then we can take another short. And so this is very logical. And let's go ahead and see what the results are. Here you can see that we actually got a very clean short here all the way to the other side of the momentum pool. Here we got a little bit of a fake out, but it actually ended up double bottoming a little bit with a higher low, and so that long was actually valid. It just was one kind of a stop out at entry, and then we go ahead and take the short all the way down to that diagonal that I had drawn out there for you guys. And we perfectly tagged it, so that would have been the epic short. That would have made this whole thing worth it right there. But moreover, you were able to take the long as well if you wanted to off of that bounce. And this one may be a little bit I think I should probably reclassify this one as discretionary, because I did give this level as a potential bounce level, but it's not necessarily part of the pool strategy. So let's go ahead and just call this one a discretionary trade. But normally when we have a key level like that, you want to take the trade. That's just support and resistance trading though. But look, we popped up above the pool, we re-entered the pool, and again, you got an epic short. And then, of course, we started to pop back up. You could have taken another discretionary trade above the Bollinger Band's midline, got into the pool, just a couple stops at entry as this thing was just chopping around, thinking if it's going to re-enter the pool or not. Eventually, it did hold that Bollinger Band midline, and then we did just pop up, all the way to the other side. And so we got another long, and then it came back in, another short, popped back to the other side, got another long, uh, exceeded the pool, came back in from the top down, so we short, and then of course we got a little bit of a bottom there, recovered that volatility pivot, could have taken that long all the way up to the neutral point of control. And so there were at least two epic trades here that you could have taken. There was a discretionary trade that was also epic, which just conforms to natural trading rules. And then also my Bollinger Band rules, you could have used that. But for the pool, overall, we had about something like, a dozen trades, like 12 or 13 trades. And we eventually had this discretionary one under the bands also that came back to the hold momentum. So, guys, this strategy is very successful. And if you're a scalper, you can use that to your advantage. So just want to show you that the strategy does work and that these key levels, okay, just pay attention to that in terms of the key levels themselves. Very respected. Very, 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 very respected, guys. Okay. So the chart is respecting the levels that I'm putting down for you. Okay. You see, where's this wobble at? Right there, right on my level. Okay. Where's all of this price action? Right here in my momentum pool between the green lines. Okay. Where did we top out at? At the neutral point of control, right here where I had a line. Okay. Where did we come back to tag? Right here at the top of the pool. Okay, so my lines were respected time and 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 time again. Okay, guys? So this is why I create these lines for you. It doesn't matter if you use the 1 hour, the 6 hour, or the daily. Obviously, you can get a billion little scalps off of the 1 hour. And so if you're a scalps trader, you might want to join the Discord. If you just want to find like a really early entry, you might want to join the Discord for those 1 hour plays. But otherwise, I will be showing you, of course, the 6 hour and the daily for those who are just a little bit more casual and a little bit reluctant at this point. Guys, let's go ahead and turn off this expired 1 hour. And let's go ahead and jump over to the 6 hour. And the 6 hour here is going to show you, pardon me, is going to show you where we are in the current structure that we're building here at the bottom, where we did get this little kind of higher low off of that wick. And yes, we had a little bit of a chop, but and by the way, you can see where that diagonal came from, right? wick here, a little bit of a wick structure over here. So we had 3 points that created a trend, and that's why I could reasonably assume that we were going to bounce off of that area. Now we could have broken down, but at least we should have gotten a bounce off of it, and that's why I say that was an obvious long point there, especially since it aligned with the bearish control zone on some other time frames where normally we do see a fight. But anyway, that old pool is expired. Let's go ahead and take a look at the new 6-hour chart here. And what we can see is that we may have a mean reversion play available here, where if we are able to push across the pool, then what we'd like to see is is that we're already above the volatility pivot and the bottom of the pool at 30,318, and that's a great thing. We want to hold above that to continue to be bullish on the 6-hour, and what we need to break above is 30,427 to 30,466. That should bump our head into Bollinger Band midline, and then we're going to be able to secure it above the neutral point of control at 30,500. So if you really just want to wait and come in up here around 30,513, after a little bit of a struggle, assuming that we don't get rejected, this is going to be your highest probability trade to the upside, is above the neutral point of control. And if we cross the alpha energy, this is a new level that I've added, guys. It shows the intensity of the movement. And so if we cross this line, we are going to be into positive intensity above 30,660. And we could say this move has some legs. And that's why I could say that maybe we could even get to the bullish control zone at 31,154. Now, that's just a target up in the air. Maybe we get this liquidity, maybe we get part of this liquidity. Or if we get the full thing, then flipping that, then perhaps we're just going to completely negate this whole move to the downside, and maybe we're going to take another stab at the top of this channel that we have been carving out here at a 32. Of course, if we get rejected on this pool and break down underneath this green line that I have marked out here and get into that bearish control zone, that's when we could be retesting the 1 to 2 week volatility pivot, which is that no-no zone that we don't want to break under, especially the Bollinger Band midline on the weekly, for obvious reasons. That's our bull market band, if you will. And guys, if we get underneath there, of course, things start to just break apart. And you would only want to re-enter on the reclaim. You wouldn't want to grab it as it's falling, okay? Yeah, so I think for the 6-hour, that's pretty much going to cover it. And it would be natural that if we are just get in this really bullish flag pointed to the upside, that could potentially just rocket to outer space, right? It is possible that we just come back up to the top of this channel. And again, we're just waiting for the moment where we do pop back up and then, get on top of there. And then there's an implied measured move here, which could be, kind of conservatively, 33 to $34,000. Okay, so let's just say 33,500. Okay, there's an implied measured move here to $33,500. And if I look to the left, keep looking to the left. Is there anything over here? Yeah, there's something around 32.36. Let's really zoom in here. Let's see. 32.6, 34, 34, 33. And then you see where we held this area over here before, okay? And so that's actually, yeah, this is actually 33.5, okay? So if we just look at this chunk right here, just imagine it as a square. Where is the middle of that? Just ignore these wicks. Just ignore these wicks, okay? The body of the candles was on this half, and the bodies of the candles on this half. This half was the bullish half, right? This half was the side that was going to think about just collapsing down and dying. Well, if we're able to get above this kind of 33, let's see, where is it? Right here. Yep. Sorry, I had that a little bit high, just right there. Ignore these wicks right here. You can see the body of the candles like really bounced off this line right here. So yeah. Okay, so whatever, 33 to 34. If we're able to flip that area, then likewise you can see it over here. Sorry, sometimes it's just so choppy. It's just very hard to get a clear vision. But we do have a level right here, around 34. 500, yeah. And then we have this kind of internal zone right here where you see this little piece right here. Okay, so it's like a little mid channel on this area around 33,500. And you can see that we do have bounciness there. And you can see underneath it, we do have kind of scary drops. And so getting above that 33 to 34 $1,000 area is going to be critical to the next stage to taking a real power play in here. And I guess we probably have something very similar over here. Yep, there it is right there. I see it right there. And then we also have this chop right here. I can see the bottom structure here. So this is the middle area. And that is likewise 33 to 34, 5-ish, right? So yeah, guys, we will be butting our heads into this little area right here, which is very powerful in terms of defining the top and the bottom of the chart. And again, like we're going to have a measured move to that area where we could possibly see a heavy rejection, or we could possibly see acceptance for the first time should we pop up above this channel and flip it as support. That measured move is going to take us right to that $33,000 to $34,000 area where we're going to have the real test to see if we're going to break out into that previous bull market territory, okay? And guys, yeah, the breakdown here is at the bearish control zone under 29,994. We do gather that alpha energy at 30,660. So again, like if you see that one crossed, probably this thing's going to keep going. If we see us losing the volatility pivot at 30,318, then it could just be breaking down there. Okay, I think I'm repeating myself there, but may have been sidetracked on a little conversation. Let's go ahead and go over to the daily. And on the daily, we do seem to be operating on the daily. You can see that we are re-entering the momentum pool. Now, the first candle can always be a little bit of a fake out, but because these things can be so intense, we have to be aware of it. We are re-entering the pool, and that usually suggests that we crossed to the other side. Now, if it's a fake out, we're going to lose the hold momentum at 30,302. And if you want to be a little bit more conservative with the stop loss, then we'll lose it somewhere around the Bollinger Band midline around 30,162. That would break this flag to the downside. And then our next level, if you just want to be ultra conservative, is the neutral point of control here around 29,891. So this is a really generous stop loss. This is a more medium stop loss, the Bollinger Band medium midline. And then, of course, if you just want to be at the entry of the pool for as tight as possible a stop loss, then 30,302. If we do continue to go, then our goal is going to be to secure the daily volatility pivot at 30,877 if you're trading on the day chart. Flipping that and then flipping 31,075 should give us energy to poke at this bullish control zone, and that should hopefully take us at least to the top of this wedge, okay, which by that point might be 32,000, and breaking out of there, it can of course take us to 32 to 34,000. Guys, let's see, is there any other key level that's really important? Yeah, we can see that we have our alpha energy here down at 28,567. So the intensity of this move to the upside, it's strong. It's strong, even at 28,567. So we could come back down, okay? Just don't get distraught. We could come back down and tag the 1 or 2 week volatility pivot, and just pop back up that alpha energy zone, reclaim the weekly Bollinger Band midline, and then reclaim the neutral point of control, and we could just keep on going, and this would just be a beautiful entry down here. Okay, so like I said in the beginning of the video, don't be too terrified of pullbacks. They're going to give you like blessings in disguise, because you're going to have a chance to buy. You just want to make sure you know where your stop losses are so that you protect yourself. What I could see happening is I could see something happening like this over here, where you can see we just grind it around. Okay, I don't know what the right term for that is. Ground around. We just ground around. Yeah, we just grinded. Okay, grinded like we're at a club, right? We're just grinded around the club, and just kind of chop, 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 right, for like a month or so, and then suddenly just boom, right, like maybe to that 33 to $34,000, and then maybe that's just too hard to break, because I showed you how important that level is to the rest of the chart. Okay, to that top area of the bull market, I showed you how important that is. And let's just say that we get rejected there, so we come back down, and then, oh hey, look, guess what we have supporting us down here? The Bollinger Band weekly midline and the 1 to 2 week volatility pivots. Oh, what a coincidence! Doesn't this look familiar? Doesn't that look familiar? And then, of course, this is actually going to be a very sizable rejection, so probably we come in here, make lower highs, and then either we make an accumulation wedge, right, that's going to pop us back up for another attempt, or we're going to break down and scare the living bejesus out of people in this area over here. Okay, and this is going to be very scary. It's going to be something that you don't necessarily want to buy. And if you're in positions when we have this breakdown, if we bounce back up, you may want to exit your positions on the bounce back up. Okay, because what could happen is that we're going to be underneath those Bollinger Band midlines. It's going to be starting to curve around maybe, and just want to get rid of your positions. If we reclaim it, you can re-enter. But if we've broken down from it, okay, don't panic sell necessarily, unless it's something really crazy going on in the world, like a nuclear bomb or something that's going to freak out everyone. But if it's just normal stuff, then maybe you're gonna have to make your decision. Normally, I would say just cut your losses here and then buy back in on the re-entry, or on some type of a structure that might lead us back up. But again, this area up here, totally cool. This area down here, it's gonna bug me. Okay, I just don't believe in taking that risk. I'd rather sell high. Okay, and then if we get a bounce here, then I'd rather buy low. Okay, if we get a higher low, then I'd rather buy low, or just wait for the reclaim. Okay, but yeah, that's my strategy there on the daily. A little bit messy, but you can see the key levels. And then, we might just do it one more time, because again, like this level is so intense. Like these levels are so intense. This pressure back here is so heavy. Okay, it's the full weight of the bull market on top of our heads right now. It's just so heavy. That's just not easy to break through in just one pass. We may need 2 passes or even 3 passes to do it, and it could take a couple months. But don't be mistaken. Okay, Alpha Fam, don't be mistaken. That doesn't mean that the market's bearish. It just means that sometimes we need to take a couple stabs at it, right? And we could get smacked down, but we sometimes need to take a couple smacks at it, a couple stabs at it before we actually end up breaking through. So, we could end up doing something like that. Okay, if we don't just get through this, either way, we're probably going to do something like this. Okay, just maybe a flash wick. Depending on what's going on, it could get extra scary, right? But yeah, guys, we just have to think about all these possibilities. It's not because I'm here trying to make calls or anything. I don't give calls, I give key levels. All right. Above the level, good. Below the level, bad, right? Like it's that easy. Like a degenerate ape could figure it out. Okay. Just above the level, good. We're probably swimming to the other side. Above the level, good. We're probably pumping to the next one, right? Above the level, good. We're probably going to continue to pump, right? Below the level, oh, sad, right? Below the next level, oh, sad, okay? Below the next level, oh, I'm getting even more sad, okay? And so as we cross down, you just shift the gears. Currently, we're pointed up from this hold momentum level at 30,302. We're pointed up, okay? So right now, I'm looking up. That's all. That's how simple it is. All right, guys, I think that's going to do it for today. Those are alpha. Guys, please stay safe. You have to understand that we are, you know, we have pumped considerably and we are at resistance. Normally, you don't buy at resistance. Normally, you buy at support. Okay, this retested support, and this was where you would buy. This retested support, that's where you would buy. We're now at, resistance, 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 and you don't necessarily buy there. We've had a pullback. That's why it's a blessing, right? Because it gives you a chance to buy back in. You don't want to buy right at this red line. You want to buy at this green line or at this green line or at this teal, diagonal, right? Great opportunity, great opportunity. Maybe another great opportunity, right? But you don't want to be buying at that red line. It's too late. A lot of people did that, and that's why we're having this short. Because what happened was, guys, is that the XRP thing and whatever good news like got announced, we pumped to heaven. Okay, the CPI data was good, the PPI data was good, the XRP case was half won, right? Pumped, and then all of a sudden, everyone started FOMOing in at the top of that candle, like absolute degenerates. Okay, and then the market makers, they're like, wow, these guys are fools. Like they're literally buying at resistance, thinking that we were going to just continue to go. And so the market makers just took the market down, liquidated them, said, nope, nope, it's not that easy. You can't just be a late long. You can't just late long into the market. We're going to take you guys back down, humble your butts, right? And so they got humbled. Are they going to humble us again, right? Because again, this whole area is kind of a late long compared to where we were supposed to enter. And maybe we have to be humbled once again and brought to some type of value area before we can actually take off. It's just how the market works, okay? The market makers make money by liquidating you. You make money by breaking through these levels, but you have to buy low and sell high. You don't buy high and then like freak out and sell your position when we drop low, right? The exception being if you have a stop loss. All right, guys, those are alpha for the day. Stay safe and happy trading.